How to properly fill out the 2021 W-4 if you have a job as well as a part-time job. And I'm going to even throw in a child on this one. This was a video that was requested in an old W-4 video of ours that we never got around to doing for the year 2020. So for 2021, I wanted to say, okay, let's go ahead and do it for someone who has a part-time job as well, just so they can see, you know, how it plays out. Now, I will be freestyling numbers, so don't quote me on these examples because the numbers and the percentages that I give may differ. That's why it's important for you to make sure that you have your check stub in front of you as well as any other supporting information. As it states right here, and basically all I did was go to irs.gov and I clicked on individuals or the tax withholding so you can get to the estimator, or you could just type this in verbatim, it'll bring you here. But basically you'll go through the W-4 and then they have an estimator so you can put in your numbers and not be confused about what to expect at the end of the year. And the reason why I say you want to have these documents in front of you, such as your last check stub, is because the more accurate you are with this system, the more accurate it'll be with your results. So right here it says gather the most recent pay statements for yourself and if you are married for your spouse too. And in this case, it's going to be a person who is not married, but they do have a child and they do have a part-time job. So I'll just say that because it fits the scenario of some. And then gather information from other sources of income you may have. So that will be both jobs in this case, as well as have your most recent income tax return handy. And that's basically for a person who wants to remember or doesn't know if they qualify for like the earned income tax credit, child tax credit. But, you know, if you don't have that in front of you, hopefully that's something you remember and you don't necessarily have to put it in. But if your situation is more complex, then it may even be beneficial to have that in front of you. Because like I said, the more accurate you are with the system, the more accurate your results will be with you. So that way it's not even guesswork. You're not wondering what's going to happen now that I've adjusted my W-4 when it's time for me to file taxes next year. Well, if you had your information intact, then you'll know exactly about what to expect. So it's an estimator. It's not going to be exact, but you'll be close enough to be confident in what the results will be. What up? You got Mr. Smith. Point 5 of Mr. and Mrs. Smith. And in this brief video, I want to talk about filling the W-4 form out using an IRS Tax Calculator, the 2021 version, for a person who's single, they have a child, and they have a part-time job. And I will be just freestyling these numbers, but you have your own numbers, so my numbers shouldn't affect your results. But I just want to give you a guide so you can maximize your, your take-home pay if that's the strategy you want to use. Now, I will say this. Have a strategy or a game plan in mind when you're filling out this W-4. Don't just be filling it out just for the sake of filling it out. Fill it out knowing that if you bring in more money per paycheck, that you're going to utilize that money to reinvest in yourself, pay down debt, invest. Use our income shifting membership, which is what we recommend. We want to get you access to the income shifting membership because now it teaches you what to do with that money. It gives you software, tools, calculators, so you can know exactly when you'll be debt free. Know exactly when you'll be able to be a millionaire from your investments. Know when you'll be able to retire early because you've grown your investment account. It gives you those tools and software in order to make that happen. So definitely consider tapping into the link available below. It may say bit.ly/royaltyQ or royaltyK, but click that link and get access to that membership so you can fully benefit from this. But nonetheless, have a strategy. Even if you don't use that system, have a strategy of what you're going to do with that extra cash flow, because there's no point in getting that extra cash flow if you don't know where it's going to go, if you don't know where it went. Have a game plan with it. Even if you decide that you want to get a tax refund and you want to maximize your tax refund, have a game plan to what you're going to do with that tax refund. All right, that's my rant over. Now, scroll down to use tax withholding estimator. Green tea, little green tea, some antioxidants. All right, right here it says tax withholding estimator. Use your best estimates for the year ahead to determine how to complete Form W-4 so you don't have too much or too little federal income tax withheld. So this is all about the federal income tax. You being able to control one of the only controllable taxes that there is, which is federal income. About you. Select the information that best describes how you anticipate filing your 2021 tax return. So in this case, filing status. Now, I did say this person is going to have a child. I did say that they were single. So I'm not going to put single because a person who is single who has a child is not just single. They're head of household. Now, I always try to highlight this because this is where some people mess up. People put head of household even if they're married just because they're the breadwinner. That's not how head of household works. Generally, you may claim head of household filing status on your tax return only if you are unmarried and pay more than 50% of the cost of keeping up a home for yourself and your dependents or other qualifying individuals. The key point is unmarried. So if you're married filing head of household, you've been doing it wrong. And if somebody has been letting you do it, like somebody you file taxes with, they've been doing it wrong. I hate to be the bearer of bad news, but hopefully you understand that if you're doing it right, you actually benefit more. So head of household is a person who is unmarried and they have a qualifying individual that they'll be claiming on their tax return. So we're going to hit head of household. May another taxpayer claim you as a dependent? No. And I'm trying to blow through from here. Dependents. How many dependents do you anticipate claiming on your tax return? 1. Income. Do you or will you hold a job this year with paychecks from which federal income is withheld? Yes. How many jobs do you expect to hold this year? This person has a part-time job, so we're going to say 2. And it says include jobs you no longer hold. This represents a person who may not have filled it out at the start of the year. They may have filled it out, mid-year or March, whatever the case may be. But the job that they no longer have a job that they once used to have. The reason why they want to know or why they want you to include jobs that you no longer have, because when it comes time to file taxes next year, 9 times out of 10, you will have to include that job on your tax filing. So if you are in a position to where you no longer have a job that you once had this year, include it on here because it helps with the numbers at the end of the year. That way they have a better gauge onto which how much you are likely to pay or receive in the form of a refund. So that's a key point. But this one is a person who's currently working 2 jobs. They got a full-time job, they got a part-time job. So I put 2. Will you receive income from a pension this year? No. So they're basically not of the age to receive a pension. Check all that apply. Other sources of income and tax payments. We'll leave all of these blank, but if this fits your scenario, always feel comfortable with hitting that question mark to see if it's something that may apply to you or may not. Demographics, we'll leave that blank as well and just go next. So now we're talking about the job. So I already put in there that it was 2 jobs. So right from the rip, they're saying your first job, your second job, because they understand that it's more than 1 job. The system is smart. All you have to do is fill it out accordingly, and it'll let you know what you need to do. Do you expect to hold this job the entire year? Yes. How frequently are you paid? We're going to say that this person is paid twice monthly. And it's a difference between twice monthly and every 2 weeks. Twice monthly is the 1st and 15th, 5th and 20th. Every 2 weeks is every other day of the week, like basically every other Thursday, every other Friday. That's every 2 weeks, because in that scenario, a person may get paid 3 times in that 1 month if that month has 5 Fridays in it. So just kind of understand the difference. But in this case, twice monthly, so like 1st and 15th. On what date did your most recent pay period end? We're going to say that this most recent payment ended on the 15th of January. Just freestyle and throwing some numbers out there. You'll know based on your scenario. Enter the total wages you expect to receive this year. We're going to say this person expects to receive $50,000. Enter any bonuses. We're not going to say that they have any bonuses, so we'll leave that blank. Using your last pay statement into the federal income tax withheld. So this is year to date and pay period. So year to date, this person has had, let's just say, $340 taken out. So that's basically $170 per pay period. $170 for a total of $340 year to date. Now, this year to date will change as the year passes. It's a tally up of how much you paid total. The pay period, though, this one, since it's every 1, every 1st and 15th, $340 for the full month. Every time they get paid, they're getting $170 taken out. So this pay period, $170 are being taken out. Do you or will you contribute to a tax-deferred retirement plan, such as a 401k? In this case, we're going to say no, but if that fits you, then definitely put it in, because it'll help lower your tax liability, because this is a tax-deferred retirement plan. But if that fits you, say yes and you'll fill it out accordingly. For this example, no. Did you or will you contribute to a HSA, FSA, pre-tax child care credit account, or other? No, we'll put no. Now, let's talk about this second job. So the first job is done. Do you expect to hold this job the entire year? Yes, they plan on having that part-time job the rest of the year. How frequently are you paid? Let's say that this is weekly. So every Friday they're getting paid from this part-time job. On what date did your most recent pay period end? So on this one, since it's the 25th, we're going to say that the most recent pay period ended on the 22nd. Enter the total wages you expect to receive this year from this part-time job. Let's say that they plan to receive $25,000. $25,000. That's how we're going to do it. Okay. Now, in this one, any bonuses? No, we're going to leave that one blank. No bonuses. Using your last pay statement, enter the federal income taxes withheld year to date. So it's a part-time job. It's a good chance that they may not be being taxed as much, but year to date they've got about 4 paychecks. So we're going to say that that person has been taxed $200. Just throwing something out there. In this pay period, they're being taxed $50. So about every week they're getting taxed $50. Just as an example. Now use your numbers. Like I said, I'm going to freestyle some numbers just for the sake of you understanding how simple it is to flow through. Did you or will you contribute to a tax-deferred retirement plan 401k? We're going to put no on that one again, no on this one again. And then proceed. Click next. Adjustments to income. Most taxpayers don't have any large enough adjustments to have a significant impact on their tax obligation. Do you want to go to the next step without including adjustments, or would you like to see possible adjustments? And I'll just click see adjustments just for the sake of you seeing the adjustments that are available. So you determine if these are some adjustments that fit you. But for this example, we're just going to say go next, or go to next step. Deductions from income. Now, it says that you qualify for a standard deduction of $18,800. That's the standard deduction for an individual who is head of household. Basically, whatever filing status you choose will give you a different standard deduction. Standard deduction for a person who is single is going to be less than that. It's like $12,400, give or take. Person that's head of household, you're going to see this, depending on their income. And then the person who is married is going to be different, like $24,000. So you choosing the right filing status is everything as it relates to how you go about filing your taxes the upcoming year. Deduction reduce the amount of your income subject to income tax. Most taxpayers take the standard deduction. Would you like to take the standard deduction or itemize your deduction? We're going to click itemize deduction just so you can see it, but we're going to choose standard deduction ultimately. But if this fits you, what you really want to understand is that unless your itemized deductions are more than the standard deduction, then it does not matter. So I want you to see where it says they're here so you'll know what I mean. If your itemized deductions are less than your standard deduction, the calculator will use the standard deduction because it wants to put you in the best position possible. So the higher the number, the better. In many cases, the standard deduction is more than what people tend to itemize. So we'll say take the standard deduction, hit next. Tax credit. Based on your inputs, you qualify for tax credits for your dependents. Tax credits are amounts you subtract directly from your tax obligation. Do you want to learn more or finish and get results without tax credit? In this case, we're going to click see tax credits, just so you can see what's going on here. Child and dependent related, you stated you have one dependent. If this is incorrect, please return, but that's correct, so we'll leave it there. Enter the number of qualifying children under 17. I'm going to say 1. Child dependent care tax credit, select the number of qualifying persons. Now, we're not going to choose this one, but this is basically if you're paying for daycare, some type of child care for your child. You would enter that in here. So we're not going to do any child or dependent care because this person doesn't have a child that they're paying for daycare. Enter an estimate of your work-related child or dependent care expenses. That's if you selected on this, you will have an estimated number. Earned income tax credit. Select the number of qualifying children. Now, this is an earned income credit. And in many cases, if you know you typically qualify for the earned income credit, you will select one right there. So we'll assume that this person knows that they qualify, so we select one. And then we won't select any of these other ones. We just wanted to select it based on the children, and then it gives us a result. So the result, it basically says, based on the information you entered, if you do not change your withholding, you are likely to get a refund, and the refund is $2,234. Now, it says, are you happy with your results? Then you don't need to do anything. Once you adjust your results, then you can use this slider below to select the approximate refund amount you'd like to get. Now, in this case, if you're happy with your results, literally all you have to do is go down here, save this information, print it out, and keep that for your records. But if you want to, or you don't have to change anything about your W-4. However, if you want to say, now, we're not going to talk about a person wanting to get a larger refund. Basically, you'll slide this over, and it's going to tell you you need to pay more money in so you can get a larger refund. That's not how we operate. We really prefer you to get the majority of your money versus giving away more of your money, because it's things that your money could be doing in order to grow. You could be building your, emergency fund, a contingency fund. You could be paying down debts, a ton of things that you could be doing if you're getting your own money. So we're going to say this person doesn't care about getting that $22.34 as a refund. They want to get more money in their paycheck. So what that person would need to do is slide this over. Now, we're not going to be able to, well, let's do this. I want to show you. I don't want to just tell you. So for a refund of approximately $0, watch what it says. To get your desired refund amount, you will need $149 withheld from each paycheck, $22 less than your current tax withholding. That's on your first job. On your second job, to get your desired refund amount, you will need $12 withheld from each paycheck, $38 less than your current tax withholding. So in this example, based on the numbers I put in, and remember, I just freestyled some numbers, this person is going to be getting an extra $59 back into their paycheck. So, understand that this one is weekly. The $38 is weekly. So you can multiply that by 4, because they're typically going to be 4 weeks in a month. So if you multiply that by 4, I'm just round up to 40. 40 times, do the 40 times 4, you're going to have 160 that comes from that. This is going to be twice monthly due to the fact that this person is paid twice a month. So there's going to be an extra $42. So if you add those up and you see that, okay, I got 160 coming from here, 40 times 4, plus 40, that's going to be an extra $200 a month. In many cases, that's the average. People get anywhere from $200 to $800 a month coming back into their household on a month-to-month basis when they adjust this form properly. So ask yourself, what could you do with that extra $200 a month? Could you invest it? Could you pay down debt? Could you build towards your savings or your, emergency fund? I don't like to call it emergency, because I believe that if you plan for an emergency, you're manifesting an emergency, and an emergency is going to show up. But if you put it in a different lingo, now you're putting yourself in a place to where you create an abundance, or the ability to build wealth, because you're investing your money somewhere where it has the potential to grow. Then, of course, if you need the money for something, you can always grab it and spend it on anything that you need. But I don't like to manifest emergencies. That's just my way of thinking. Hopefully that resonates with somebody. But what you got to understand is, now you're able to take that extra $200, and even though you won't be getting a refund, you're at least able to hit your goals, but you don't have the fear of owing. And that's what many people don't want. They just don't want to owe. And then once you say that you don't want to pay in anything extra, you click that plus sign, and it says how to adjust your withholding. Check if your employer does this via paper or online. So if they do it paper, then you can print it out yourself and turn it in. If they do it online, then you should know how to log in to get it. But it basically will tell you to complete a new W-4 form via paper as follows. So you'll check your personal information, on the lines, and basically you'll select head of household. It's telling you how to fill it out. It's a 0 in additional withholdings per period, so it'll be line 4C. So it's telling you what to do, so that way you can have it and submit this new information to your employer as soon as possible. So that way you're not wondering, okay, what do I put? It's telling you exactly what you need to do in order to make that happen, And that way you're able to benefit from using this W-4 strategy. Power in this strategy, I did a video before showing a person how they can build wealth using the W-4. I went through a whole debt elimination game plan and everything that showed them how to make that happen. So I try to remember to link that to this video as well. So once it's at the end, you can see, okay, W-4 to wealth. But I also did a recent one that was centered around W-4 to millionaire. Basically, how an extra amount of cash flow that comes from this W-4 can position a person to become a millionaire during their career. So just take advantage of the power of the W-4. Hopefully this helps for a person who has a full-time job and a part-time job, and you're head of household. If this has benefited you, like, consider subscribing, hit that bell notification. Share this with somebody else you feel may benefit, and also let me know if there's some other examples that you would like, or if you have questions, and I definitely wouldn't mind creating another video that speaks to your scenario. Hopefully this helps. That's all I got for this video. Mr. Smith signing out. Salute.